and welcome. You're watching Market Fatafat on ET Now with me, Snehisha, and with me is Vinny Motiwala. This is a show where we're going to take you through all the stocks that are buzzing in today's trading session within a minute. But Vinny, before that, let's take a look at what the markets are doing. And while we're off the highest point of the day, not much to complain about, isn't it?
Not much to complain about. Clearly off the day's highest point. At one point of time, we were around the 22,900 mark. Now given up those gains, but still trading with gains of almost 0.7%, so not a bad move. That is coming in for the benchmark indices. Let's look at what the broader markets are doing also. We have the Nifty mid and small cap that is managing to hold on to very strong gains, better than what the benchmark indices are doing. So outperformance is coming in from the mid and small cap. But PSEs, or the PSU side, is something that is holding on to very, very strong gains. The ones which had given up those gains on the election days, that is what has started seeing a run up again. And whether you look at names like BHEL, REC, PFC, HAL, IRCTC, PFC, all of them are the ones which are holding on to very, very strong gains among the top FNO gainers. All these names coming up. So yes, that's how an interesting move that we're seeing in terms of the top sectorial gainer. Today we have the Nifty Realty, while in the losers we do have the Nifty FMCG, which had seen a run up yesterday, a very sharp run up. Today the Nifty FMCG seeing a bit of a correction. So all those FMCG names, whether you look at an HUL, Britannia, Tata Consumers, all of them are down and out in trade today, seeing a sharp cut and sharp decline on that front. But yes, that's how we're seeing in terms of the move that is coming from the markets.
Absolutely, and with that, let's also kickstart the show. But before we go to the stocks that are buzzing in today's trading session, we are being joined by the management of TVS Supply Chain. Ravi Vishwanathan, the managing director at TVS Supply Chain Solutions, joins us now. Mr. Vishwanathan, thanks so much for taking the time out and joining us. Now, let me ask you, it's a decent set of numbers in revenue and net profit for this quarter, and you are targeting a 15% year-on-year top-line growth by FY27. What do you think is going to aid this, and what are your growth drivers going to be?
I think importantly, FY24 was a very key year because the integrated supply chain segment grew by almost 14.4%. And this is on the back of probably a difficult year for the freight business globally because global trade volumes are down. But going forward, I think when we look at our pipeline, we have over 4,000 crores of pipeline as we speak today. And that gives us tremendous confidence that we will continue on this double-digit growth trajectory. And our aim is to get to about a 10 to 15% growth for the company in FY25 and going beyond. At the same time, we want to focus also on ensuring that we're driving profitable growth, and we'll continue to look at how we can expand our EBITDA margins. For FY25, we're looking at about a 50 to 100 basis points increase in the EBITDA margins.
Right, Mr. Vishwanathan, good afternoon. This is Vinny joining in the conversation as well. And as you pointed out, in terms of the current order pipeline, that stands at around 4,000 crore rupees. How much of it would be realized in Q1 and Q2 of FY25? And also, could you tell us in terms of the current order inquiries you're seeing, what is the visibility going forward in terms of the order book?
So when I say 4,000 crores pipeline is really the revenue pipeline that I look for in FY25. So typically our conversion ratios are about 25%. So we're looking at about converting about 1,000 crores of revenue from new business development for the fiscal FY25. And that's being driven on the back of some very large orders that we are today engaged in. We spoke about the fact that we won certain marquee customers over the last couple of years, especially the big breakthrough for us was Centrica in the UK. And that has opened the doors to be able to participate in very large deals. Centrica, as you remember, was a 2,000 crores deal that we signed. And we think that we have a good opportunity now to convert a few more of that size over the next, I would say, 4 to 8 quarters. So the deal sizes are increasing. The quality of our customers is also significantly shifting. We've spoken about the fact that we wanted to be targeting about 100 Fortune 500 customers. 2 years ago, that number was 62. Last year, in FY24, that number increased to 78. So we continue on the trajectory of increasing both our revenue trajectory and also the quality of customers. And what that means is it gives us far more opportunities to mine these customers and provide more capabilities that we have across the supply chain segment that we participate.
All right, and also tell us about your margins, because the network solutions margins have been on a downtrend, whereas on the flip side, your integrated supply chain margins have improved. So, what's a sustainable level of EBITDA margins we can expect going forward?
The supply, if you look at the overall company, we have expanded the margin. So if you look at the EBITDA numbers, in spite of the fact that our revenues in FY24 dropped significantly by almost about 794 crores compared to FY23, we have been able to expand our EBITDA margins. So our EBITDA numbers were actually 25 crores more than FY23, which marked about a 3.7% increase in the margin. So we continue to look at EBITDA growth, and we believe that while the freight business itself is going through turmoil, we are focusing on profitability. We are looking at operational efficiency, procurement efficiency, and we are still waiting to call what it would be in terms of volume growth because of the uncertainty which exists in the market. The global trade volumes are down. Red Sea situation is not adding any joy. And the wars are going to create that uncertainty. But our focus really is to say, in this environment, how do you ensure that we bring in operational efficiency? And that's what you would have seen in FY24, that although the revenue dropped, our EBITDA has actually expanded. And as a company, we are focused on ensuring that we deliver 50 to 100 basis point improvement in our EBITDA numbers for FY25.
Right. Also, if you could just talk to us a bit more in terms of the revenue mix. How do you see India versus the rest of the world mix going forward? And what are the demand trends across sectors that are shaping up in India that you're seeing?
So if you look at the current mix, it's about 30 and 70, 30 in India and 70 rest of the world. Our aspiration is to grow at a significant differential velocity in India, given the economic activity that we see. Now that the elections are over, we believe that the continuation of the policies and probably even accelerating some of the policies to boost manufacturing will continue. And that should give a significant boost to the supply chain business. So we believe that the economic activity here will drive higher growth. And aspirationally, we want to be at about 35%, 65% over the next 8 to 12 quarters from a mix perspective.
All right, so that's on the global front, but how are your demand trends across sectors shaping up in India as well?
Right. So if you look at the sectoral trend, I would say manufacturing continues to be significantly good in terms of our pipeline. We signed a fair amount of deals last year, and also early on we had announced a couple of deals in the month of April here in India. So India, we continue to see an upside on terms of manufacturing side. But there have been some setbacks, especially on the e-commerce side. We don't participate in the B2C segment, as you all know. But on the fulfillment side, we are watching the e-commerce space, especially with some of the well-known brands going through a little bit of turmoil at this point in time. But overall, we are bullish about India. We're bullish about the fact there is tremendous opportunity given the economic pipeline and the activity going on here, and the fact that the continuation of policies and the velocity at which hopefully the shift and the acceleration of the China Plus One strategy should create more opportunities to the supply chain in India.
Right, and just a last question from me is in terms of the company that has reduced its debt in FY24, and it's majorly consists of working capital debt. What's your outlook in terms of the debt levels going forward?
I think it's a very, very pertinent question. We have a very fit balance sheet today. We started last year with about 1,783 crores of gross debt. That's now pruned down to less than just about 700. And if you net that for the cash balances, we just have about 200 crores of working capital debt, and it's entirely working capital debt. All our long-term debts are retired, so we are very fit as a company, and that's important in the light of what I said, especially around some of the large deals that we are pursuing. We're very confident of converting some of those large deals in the next 4 to 8 quarters, and it sets us very well. So from a balance sheet perspective, I would say we are extremely fit.
All right. Well, thanks so much for joining us today on the show, Mr. Vishwanathan. Thank you for taking your time out. That was the management of TVS Supply Chain Solutions. But viewers, before we go on to the other segment and talk about all the stocks that are abuzz in today's trading session, we'll slip into a very short break on this edition of Market Fatafat. You stay tuned.
Welcome back, and you're watching Market Fatafat on ET now. Let's get started with all the stocks that have been buzzing in trade on the back of news flows and technicals. And on the technicals today, we're joined by Ashish Kyal, while from the research team, we have Gaurav joining in with us. A very good afternoon to both of you all. And Ashish, let's start with your first stock then. Muthoot Finance, what's the view on terms of charts and technicals for this one? How do we see this moving in terms of the gold financiers? Where is it headed and what is the target?
Finance, the overall trend has been positive. The stock has already touched the 50-week high. We can clearly see that. And as far as there was a consolidation, and it has formed a good candle today, but there was some profit booking from the higher levels. We can see that. Nevertheless, I think this is an opportunity to buy the stock. On the downside, the support for the stock is going to be around 1580 levels. And on the upside, we can expect it to reach towards 1850. So a dip can be used as a buying opportunity with 1680 as a stop loss, for 1850 as the target.
Okay. Keeping an eye out on the target over there for Muthoot Finance. Let's move on, talk about Heritage Food. Why is this one in focus? Obviously, we're seeing a rub-off impact from Chandrababu Naidu's election victory. And yes, why are we keeping an eye out on Heritage Food? Because this company was founded by him in 1992. And obviously, in terms of the election win that he's had in Andhra Pradesh, we're keeping an eye out on this one. It has market presence in more than 10 states across the nation. And Chandrababu's wife holds, I beg your pardon, holds around 25%, 24.4% to be exact in terms of the stake in the company. Let's not forget also, in terms of an announcement that came in yesterday, was that they have launched new products, that's ice creams as well as laddus. So keeping an eye out on Heritage Food on the back of this. Surely today was up almost 10%. That upper circuit side is just around there for Heritage Foods.
Well, absolutely, and my mouth is watering while you're talking about this because it's lunchtime and I'm really hungry. But let's keep it going with the stocks then, and let's bring in Ashish back on the technicals. And Ashish, you've picked out Pokarna for us today. This is a stock that we don't usually discuss on the show. Tell us why this has made itself onto your radar and what are the levels you're watching out for, because if you see today the stock is holding up smartly, but in the last 6 months it's not done much.
Yes, absolutely. If you look at the last 2 months or so, we can clearly see the stock has moved from 440 levels to 609 now, and it has moved on the upside with a huge volume. We can clearly see a strong bullish candle pattern formation along with huge volume. So that is keeping the stock on my radar. And I think over here there is a possibility of a start of a next leg or next wave on the upside. We can expect it to reach towards the level of around 700 on the upside from here on. And on the downside, the stop loss can be around 570 levels. So the risk reward also looks very appealing.
All right, Ashish, thanks so much for taking us through that. Those are the levels to watch out for Pokarna. Let's keep it going. Let's talk about a high flyer in today's trading session, and that is Uno Minda. The stock has hit a new high today. Market cap has crossed 50,000 crore, and the stock had also briefly crossed 1,000 rupees per share for the first time today. Now, this is on the back of some positive news flow. The company has announced that it has entered into a technical license agreement with China-based company Suzhou Inovance Automotive Company Limited for the manufacturing and sale of select high voltage category electric vehicle products. The products will be applicable for both passenger and commercial vehicles in the Indian market, and this partnership will significantly expand this company's electric four-wheeler portfolio, enabling them to effectively cater to the growing Indian EV market. This is what the company has said in an exchange filing. So very positive news flow coming in for the company, further expansion into the EV market, particularly EV four-wheeler market. And on the back of this news flow, the stock is up 14.5% as we speak.
Let's move on to the next stock on the technicals. At number 5, we do have Metropolis Healthcare, Ashish, that you've picked out for us. In the last 1 year, when you're looking at the chart, slowly, steadily picked up pace. And today also trading near those 52-week high levels. What's the word now on Metropolis Healthcare? Should one continue to, hold the stock or maybe book some bit of a profit?
If you look at overall sector, I think the pharma and the healthcare sector, the overall sector has outperformed sharply, and we can clearly see Metropolis has also continued to rise in this trend, and I think the momentum is picking up in the entire space. So this stock might get benefited out of the sectoral rotation that we are seeing. We can see that in this collapse that happened on 2 days back, there is a sector rotation from where we can see the pharma FMCG space is now buzzing. So I think it's an opportunity to buy Metropolis, continue to hold on to the stock here, and we can expect it to reach towards the target of around 2120 levels on the upside over short term, and on the downside one can maintain a stop loss of around 1960 levels.
All right, so 2120 is Ashish's target for Metropolis. We'll be watching out for that as well. But let me take it across to Gaurav now, who's joining us from the research end. And Gaurav, you've picked out 361 VAM today. What's the news flow? Because the stock is holding up pretty well.
Well, yes. When we talk about this stock, there is a news flow coming in, and as per sources, the company is now expected to launch a new business line, and this new business is going to come in June itself. According to sources, product line is going to be something which is going to focus the HNI segment. As we all know that HNI segment is largely distribution-led segment, and if you look at the business also, there are the sources which says that there have been increased inquiries coming up from global markets as well as markets like Dubai and Singapore. If you look at company also, the company has actually delivered PAT CAGR of 40% over the last 4 years, and in the last week we specifically saw that the stock was down because of some employee selling that we saw. But apart from that, if you look at today's trade, it is up almost more than 3%. So definitely watching out on this stock, because we may see some further upside coming up in this stock.
Okay. Let's keep an eye out on 361 VAM, but let's move on and talk about Biocon then. And Ashish, Biocon today surely is buzzing away in trade. Overall, when you're looking at it in the last 6 months also, 32% return. What's the view on this pharma name? And 316 is what it's trading at, still a buy call?
Yes, indeed, because if you look at Biocon, I think 2 days back it touched a low of 270, sharp recovery from there. And yesterday it formed an inside candle. Today there was a gap up, minor gap up, and it's sustaining there. So I think the overall trend is on the buy side, and the stock should start gaining momentum from here on. Volumes are picking up, so overall trend looks positive. It has managed to cross back about its 20 days average again, which is a positive sign. So long positions can be created in Biocon. Expecting a target on the upside around 335 in the stock, and on the downside one can maintain a stop loss at 305.
Okay, surely keeping an eye out on that. But let's move on to the next stock, and this is especially on the back of a bulk deal that we have seen. Bhagirath Chemicals is what we are talking about, where we have seen RK Damani's a company that is derivative trading has actually bought shares in the company. It is around derivative trading has bought around 43 lakh shares in the company at a price of 188 rupees per share, and we've seen the seller of the company coming in there. But because we are seeing marquee investors checking into Bhagirath Chemical, we are keeping an eye out, especially on this stock today, trading with gains of almost 10 to 11% as of now. So yes, watching out for this one in trade on the back of a bulk deal that happened last evening that we are seeing in Bhagirath Chemical, where RK Damani's derivative trading has actually bought stake in the company.
All right, well, that stock is also buzzing quite smartly today. Let me talk about the next stock in focus, and that is Vedanta. Now, Ashish has also picked up this stock on the technical side, but before that, let's talk about why the stock is buzzing. And let me give you a fundamental gist of it. The State Bank of India, which is the SBI, has granted its consent to Vedanta's proposed demerger that will separate its existing business into 6 independent pure play companies. This crucial approval from SBI is seen as the last major compliance requirement that Vedanta was waiting for, which was keenly watched by the market, and now this approval paves the way for a $20 billion demerger of Vedanta. So on the back of this news flow, the stock is holding up more than 3% higher in today's trade. But while this was on the fundamental side, Ashish, tell us why you have picked out Vedanta on the technical front. What levels are you spotting here?
Absolutely. That will result into a lot of value unlocking from the fundamental side, but from the technical side also, the stock has managed to cross back above its 20 and 10 days moving average. Along with that, it has also recovered back all of its losses from the 2 days back scenario, and we can clearly see it's now going to break out on the upside for the targets of around 520. So I'm optimistic the stock can touch the levels of 520 on the higher side, and on the downside one can maintain hold on the stock as long as the levels of around 435 is intact.
Okay, keep an eye out on those levels for Vedanta. Let's move on, talk about IEX and why is IEX charged up in trade. Gaurav, take us through those details.
IES has actually come up with their monthly update for the month of May, and if you look at the update, the company actually came up with a strong update. So for example, when we talk about monthly volumes, that has increased almost by 29% on a YY basis. When we talk about monthly volumes, now the company has actually recorded highest ever monthly volumes of 3,352 million units, and the increase in terms of RTM has been at around 38% on a YY basis. When we talk about green market, the company has actually shown a significant growth there as well. Company reported almost 74% jump on a YY basis in green market, and we talk about renewable energy certificates, the volumes went up almost at 640% on a YY basis. Lastly, when we talk about DAM, which is day ahead market prices, now they stand somewhere near 5.3 rupees per unit, which is actually lowered more than 20% if we compare it with the bilateral contracts. And on the back of this, if you look at the stock performance also, yesterday the stock was up almost 2 to 3%, and today also the stock has held up almost more than 3%. So definitely watching out on IEX on the back of the strong update that has been shared by company.
Alright Gaurav, so that's why IEX has been a buzz in today's trading session. But Ashish, you also have IEX on your technical radar. Tell us what levels you're spotting here, because not much move being seen over 6 months. In fact, on a YTD basis, the stock has given negative returns. So what are you penciling here? When can we see growth? Anytime soon?
For almost 6 months, it has been moving in a very broad range, and today we saw some kind of a green shoot where it managed to break out of that range, and it is above that level of around 160, which is the breakout level. There is some profit booking from the higher level that we can witness, but I think if it manages to cross back about that 166 mark, then the trend can continue or resume on the upside. So the overall trend for IEX looks to be bullish. Volumes are picking up well. We can expect a target of around 175 on the upside over short term, and possibly 180 over a little longer horizon. And on the downside, the stock should not break back below that 156 mark.
Okay, keeping an eye out on that one. Let's move on and talk about the next stock that's buzzing in trade, and this one is UK in India. And this is also on the back of a bulk deal that we saw coming in, where we saw that market investor Ashish Kyal has invested in this stock, and this is through the company Bengal Finance and Investment, where they have a bought stake in UK in India, which is a company that is into technical and financial collaboration from UK Kyogo Company Limited, which is a Japanese company. They manufacture hydraulic equipment. So yes, they seem to have checked into this stock, and they bought around 1.98 lakh shares in the company. Price is around 1,050 rupees per share. That is the reason that we're seeing UK in India today buzzing away in trade. At one point of time, it was up more than 7%. Right now, also managing to hold on to gains of 6% in trade after marquee investor Ashish Kyal is entering in to the company into the stock through its company.
Alright, well, let's talk about technicals once more. And Ashish, you've picked out Bajaj Auto for us. 6 months, very good moves coming in over here. Roughly 60% uptick on Bajaj Auto, and it's also at its 6-month high as of now. Do you see any more upside to this stock, or what's your view coming over here?
If you look at auto space has been an outperformer for quite some time, and that has continued even now. And Bajaj Auto clearly from the month of April till the start of June, we can see a huge consolidation has taken place, and it has now managed to give a breakout of that consolidation zone. And if we talk about the targets on the upside, the width of the consolidation is the target, which can be around the levels of 10,000. So the stock is trading at 9,700. We are optimistic that 10,000 is the target, which it can reach very quickly. And on the downside, one can maintain a stop loss for the stock at around 9,300 levels.
Alright, 10,000 is the level that Ashish is watching for Bajaj Auto. Let's move on. Let's talk about Century Textiles, because that stock has zoomed up as high as 14% in today's trading session. As of now, also trading with more than 13% gains. And this comes after the company's arm Birla Estates has entered into a joint venture with the Barmalt India for a luxury housing project in Gurugram. Now, the land parcel is spread across 13 acres with a development potential of approximately 2.4 million square feet, and this property offers a revenue potential of approximately 5,000 crore rupees. So on the back of entering into this JV and this development potential of a whopping 5,000 crore rupees from this land parcel, stock is holding up pretty well as of now, Vinny.
Okay, surely keeping an eye out on this one. Sharp run up, almost at the day's highest point actually when you're looking at the
Absolutely,
chart.
yes, very good moves.
Yes, so keeping an eye on that, but let's move on, talk about CGDs because they are also in focus, they are also buzzing away in trade. And Gaurav, why is that? So why are the CGDs in action again?
Well, yes. When we talk about CGDs, it seems that they are back in action. And if we talk about the brokerages now, they are also being a little bullish on these companies. So talking about Citi now, they have actually retained the constructive view when we talk about Indian gas sector. And within Indian gas sector, they have actually highlighted 3 companies, which is GAIL, IGL and MGL, which remain as their preferred choice. What they believe is that there is a consolidation in CGD sector that we are seeing, and that is likely to continue going ahead as well. Lastly, when we talk about consolidation, the biggest beneficiaries could be GAIL, and which will be followed by IGL and MGL. Government is also going to consider the gas section to brought under the GST section, and on back of this, we may see some further upside coming up in these stocks. And lastly, key beneficiaries of GAIL and CGDs are likely as if we talk about Citi. And on back of this, we will definitely watch out on these stocks. If you look at the stock price also, the GAIL is up almost by 6%. When we talk about MGL and IGL, they are also holding up more than 3% in trade today. So definitely watching out on what happens in CGDs in days coming ahead.
Alright, Gaurav, so CGD is buzzing on the back of a brokerage note, but with that, we'll slip into a very short break on this edition of Market Fatafat. When we return, we'll keep it going with all the stocks abuzz today.
Doctor? All the rowdies of my colony start reciting Sanskrit verses as soon as they see me.
If you like this video, then like, share and subscribe to ET Now.